And I'm also excited to be able to share some of the keys to the success that I've personally experienced here in Ontario, as well as some of the keys to the successes of clients of my own, colleagues of my own, and just lessons that I've learned over the last 11 years. It's going to be fun. It's going to be informative. At the end of the evening, we will be taking questions, so if you do have questions, please feel free to ask your questions in the chat bar down below. Ashar will make sure that they're all going to be getting to me, and if towards the end of the evening I haven't answered those questions, we will make sure that we do get them answered for you. Now, is there a specific challenge or a specific topic anybody is looking to maybe overcome through the information that they're going to gather from this webinar, or anything that maybe you would want to speak to specifically? Maybe we can hear about that while we're waiting. We've got about another minute to go before we start. And Ashar, if you do see any specific questions that do come in before the presentation gets going, please let me know.
We have Mike. We have a couple people saying hi that just joined us. We have
Hello.
Mike from Ottawa saying hi.
Hi, Mike.
We have Jim from Oshawa saying hi.
Hello.
We have Jennifer from Toronto saying hi.
Hi, Jennifer. Thank you for joining us.
We have Shazia from Markham saying hi.
Hi, Shazia.
We have Jonathan from Newmarket. He also says hi.
Hello. Hopefully you guys aren't getting too much snow out that way.
We have Jeffrey from Markham saying hi.
Hello, Jeffrey.
We have Catherine from Penetanguishene, Ontario saying hi.
Oh my goodness, I don't even know where that is.
Wow.
Hello and welcome.
I had to pause for a second before I tried to pronounce it. And we have our first question, Lena.
Okay, amazing.
Rick's question is, if I have little money or I have trouble finding funding to invest right now, what should I do? What do you suggest?
We will be going through that. That will be in the second portion of this presentation. So we will touch on how it is that we will be able to create, I'm not going to call it a no money deal because there is money that needs to be exchanged, but how it is that we can limit the money coming out of your pocket personally. And you'll understand why. I was in a very similar situation when I did get started. And I think on that note, I will start with a brief introduction about myself and we'll get right into the presentation. So I personally have, I started investing in 2004. I purchased my first property. I was 21 years old. I did not have a job and I did not have any form of a down payment. Now, it is true in 2004, financing properties, higher ratio mortgages were available, but my first property was actually purchased with a vendor take-back mortgage. So the person that I was purchasing my property from actually held a mortgage in addition to the mortgage that I was able to obtain from the bank, which meant that I actually didn't put any money down. By the age of 25, through the investments that I had accumulated, I was able to replace my $25,000 a year salary. I was working in the fitness industry, and when you're working on commissions, you have the ability to earn a substantial amount of money at a very young age. I personally have successfully completed many fix and flip properties. Our primary focus has always been buying, fixing, and holding. So we refinance, pull the money out, and keep the properties long term. I've run successful rent-to-own properties, I've done land sandwiches, conversions, and the majority of my portfolio is actually multifamily property. So all of the property that I hold will have a minimum of 3 units. And we go anywhere from 3 till about 12. That's our sweet spot. In addition to real estate itself, I have written a book. It's called Stilettos and Hammers. It's the Modern Woman's Guide to Investing in Real Estate. It is a book geared towards female investors because the world is a little bit different for us. It's just a little bit of a how to get around some of the old school mentalities. I own and operate a property management firm here in Ottawa. We actually service Hamilton all the way out and across, and I do quite a few different types of consulting, both coaching and consulting for management firms and businesses through a company called New Venture Solutions. And I write for Canadian Real Estate Wealth. If you guys are not familiar with that magazine, it is probably one of the best Canadian real estate investing publications. It's distributed coast to coast. You can find it online. You can get it at Home Depot, Chapters, Walmart, Shoppers. It is a great tool and a resource, especially for those of you who might be starting out. They have great information with regards to the market updates, what's going on, sales, price points. So if you don't already subscribe, this is something I would definitely recommend, and I do not get any kind of a kickback. I just do believe in this magazine. So how are we going to create wealth through real estate? Well, the first thing I think all of us as investors need to understand is that great deals are not created, they're found. Or sorry, they're not found, yeah, they're created. So when I say they're not found, they're created, I mean you're not going to go on to the MLS and find the deal of a lifetime. You're not going to be searching on Kijiji or the ICX, which is the MLS for commercial real estate, and find a deal that is going to be exactly what you wanted. If you're not getting creative, if you don't have to think outside the box or work to make that deal happen, either your standards aren't high enough or there's something that you're missing in the due diligence that you're going through. Another thing that as real estate investors we really need to understand is our jobs are not to buy real estate. We are not here just to buy property. We're here to solve problems. So if we understand the problem that the individuals who are selling these properties are currently experiencing, and we're able to find a solution to that problem, you're actually going to find that the deals that you're able to negotiate and the level of creativity that you're able to introduce will improve tenfold. So just like that very first property that I was able to acquire with no job and with no money, I had to take the time to understand what it was that these sellers were experiencing. Now, at that time, unfortunately, the amount of knowledge and information I had was limited. I had purchased real estate investment courses. They were all purchased through a US company, so a lot of the information I had was American. But what I did learn was step one, understand the needs of my seller and find a solution that's win-win. So when you're doing something like that, when you're requesting things that may seem out of the norm for you, or when you're requesting that a seller is holding back a mortgage, so they're actually going to be mortgaging what would have been your down payment. If you have taken the time to understand what they need, they will be happy if they have that ability to do that with you, which will then allow you to purchase property with very limited funds out of your pocket. Now, in order to be successful, you first need to understand what it is that you want to do. We need to understand why, as investors, we're actually investing. Are we in this game just because we're looking to make $500 extra a month because we want to take a vacation annually? Or are we investing because we're looking to build a legacy? We want to leave something not just for our children, but for their children's children. We want to leave something that's going to go on. Something like the Trumps. They've got a legacy that's going to live long after they have passed. You need to know who it is that you're going to be investing in or with. So are you going to be investing with partners, or are you going to be bringing partners to be investing with you? Do you have a team? If not, how will you build a team? Do you have support? So are your friends, are your families against you, or are they with you? And if you don't have support now, where can you find that support? What is it that you actually want to be investing in? We'll talk about this a little bit later, but there are multiple strategies that you as an investor can take advantage of. And you need to be careful, because just like any other game that you may get involved in, when they tell you jack of all trades, master of none, the same will apply when you're investing in real estate. If you do everything all the time, you won't master anything, and you'll work extremely hard for very little rewards. You need to identify your markets, and the where should not be driven by dollars, and you need to know when you're ready to start. You need to have your ducks in a row. And as you're starting to answer these questions, you'll start to realize, how much time do I really have to dedicate? Do I want to be the one who's running after these deals, chasing the realtors, chasing the sellers, or do I want to be that individual who gets to sit back at home and just watch the money get deposited into my bank on a monthly basis? When you have these answers, then it's time to start building the 3 keys to your success. The 3 keys to creating your profits is to find the right deal, to find the right team, and to create the right systems. Creating the right deal takes multiple components, and it's not just a matter of finding the house that cash flows the most. Before you even worry about looking at that house, you need to identify your target market. You need to identify the real estate market you want to be in. You need to identify your exit strategies. You need to crunch your numbers, and you need to stay focused. In real estate, especially when we're starting out, it's very, very easy for us to lose track of what it is that we want to do. So focus is very important here. When we're looking at our market, I'm talking about your sellers. Who are these ideal sellers? Are you looking for people who are near bankrupt? Or are you looking for people who have been maintaining their properties? They've been managing them well, they already have the systems, and you're going out and you're purchasing a turnkey business. Who are your ideal buyers? You want to think about this not just from the perspective of an investor who wants to buy property, fix it, and flip it, but you want to look at, if I have to one day offload, what type of people do I want to be dealing with? And when you're able to identify that, it will help you identify the type of property you want to have in your portfolio, because you're going to be thinking about that end user at all times. You want to know who your ideal tenant profiles are, and if you actually want to have tenants. Do you want to deal with high income? Do you want to deal with low income? Or do you want to deal with middle income? And who are your ideal investors? As investors ourselves, regardless and unless we come from an environment where we've got an unlimited source of cash, we will have to work with other investors at some point in our career. And we need to identify who those individuals are from the beginning. Your investor profile will determine how quickly you're able to grow. It'll also determine how much you enjoy the game that you play. You need to know how active an investor you want to be partnering with, the level of skill that they need to have. You need to know What risk tolerance do they have, or are they willing to take? And do you guys actually see eye to eye? Your investors are probably the most important who when you're looking at the target market that you want to be marketing to. Your investors are the people, believe it or not, who will actually make things either very, very easy or very, very difficult. Your tenants will be handled by your property manager. Your buyers can be handled by your realtor, and the same thing with your seller. But the investor, it will always be between you and them. So make sure you know who it is that you want to be working with, so when the time comes, you're not scrambling. When we're looking at our real estate market, there's quite a few things that we want to look at. We want to look at, is there an overall increase in demand for property in that area? We want to know, are people buying houses? Do people want rentals? Do people want, apartment buildings, or are people all leaving? Is unemployment above or below the average? If we're in a situation where all of a sudden unemployment is spiking, it's very possible that people are going to be migrating out of the city we're looking at to go somewhere where jobs are available. Is there population growth? Is the city growing or is it shrinking? If it's shrinking, you're not going to have businesses coming into these areas. And if businesses aren't coming in, neither are the jobs. And again, that just means that people are going to start leaving. Are there currently sales over list price? While this may seem like it's a great place to be, property is selling, everybody's buying, it's not where you as the investor wants to be. If you're in a market that's hot, it means that you may be coming in just as this market is becoming artificially inflamed. So as an example, in Toronto, we've all seen a spike of foreign money coming in that's driving the condominium sales, even though there aren't occupants in there. This will artificially inflate the prices. And I'm not saying that our market will crash, but it will have to correct itself, which could mean that the investor who went in because they believed that there was going to be a high rate of appreciation, so they sacrificed immediate cash flow, could find themselves in a situation where their price point is sitting with very minimal upswing, and they're still not able to get the cash flow that they need to cover the expenses that they have. You want to know if there's a short-term problem. We're in Toronto. I'm not there currently, but I will be tomorrow. And Toronto, we are expanding the subway system. They're looking at putting in new lines. Look at the neighborhoods that are in these areas, because the people who are currently living there, when they start drilling and they start digging and all of the heavy machinery is coming and going, it's going to pose a bit of an inconvenience. And when these people realize that they may not be willing to tolerate however long this may take, and they start selling, there may be a situation where this market will actually see a downturn because people don't view it as a desirable area to be in at that time. If you're able to deal and handle with that short-term problem, when that problem has finally left, you will see a great upswing to the investment that you've made. And you'll be able to benefit and profit from something that somebody else wasn't able to see long-term. And then you want to find out if this is an area that will it's going to be affected by the ripple effect, or will it benefit from the ripple effect? So ripple effect is very, very simple. Something happens in downtown Toronto. Will this affect what's going on in Ottawa? No. So if the condo market in Toronto were to crash, let's say, the immediate area of Toronto will see a huge crash. And as you move further away from where the impact is, the ripple effect will slowly become less. So as you move out into the suburbs, you'll see a slight dip. As you move further north, you'll see a smaller dip. And once we get far enough away, there really won't be any effect on the market at all. So you want to know, is this an area that's going to benefit from the ripple effect, or is it an area that's subject to a ripple effect? This is very important when you're looking at property that you want to buy and fix and flip short term. Exit strategies. So as you can see on the right side of your screen, I've got a bunch of exit strategies listed. Buying new is really just buying something that's brand spanking new, either on blueprint or something that has been completely renovated. It requires absolutely no work, and you're just walking in there, putting in a tenant, and sometimes there is a tenant already in place. Fixing and flipping is exactly what it sounds like. I'm going to buy it, I'm going to fix it, and I'm going to get rid of it. Fixing and holding is, in my opinion, where the real gravy is in residential real estate. You buy a property below market, you put the money in to fix it, you put in a tenant, you refinance with the bank, you take some of your initial investment out if you're not able to get it all, and you continue to enjoy the benefits of cash flow. RTO is rent to owns. Rent to own properties are just properties that you're buying, putting in a tenant who has agreed to purchase the property from you at a predetermined price on a predetermined date. It's a safe strategy for the most part because you do know when you're going in, you know when you're coming out, you know what price you're buying and what price you're selling at. And because it is a rent to own, you're able to collect a higher deposit from your tenant up front, as well as higher monthly cash flow for you because of the additional rent that your tenant will put into place. Multifamily property, again, is a very good means of generating solid income. The more doors that you have under one roof, the less susceptible you are to any type of financial impact should you have one vacancy. When you've got one roof to deal with and 6 tenants underneath, paying for, patchwork becomes a little less stressful than having to repair 6 roofs on 6 single-family homes. Commercial, retail, and office space is definitely a great place to be if you're able or comfortable to move into that world of investing. The Tenant Protection Act doesn't apply, which means that you're dealing with contract law when you're dealing with your tenants. It also allows you to really charge your tenants for everything. Triple net leases will allow you to charge for your taxes, your insurance, your maintenance. They pay their utilities. If there's any type of unforeseen maintenance required, you're able to tack that onto the bill for your tenants' monthly maintenance. And then you've got tax sales. Tax sales are sales of property through the city because the owners have not paid their property taxes. When you're looking at an exit strategy, you want to know what's the best thing that can happen. So if I buy this house to fix and flip, I believe my best case scenario is I'm going to make a $50,000 profit. What's the worst thing that can happen? I'm going to buy this house and I want to flip it, and I'm going to find who knows what kind of damage behind the walls, and I'm going to make zero profit. I might even lose $10,000. And what's the most likely thing to happen? I'm going to buy this house and I'm going to flip it. My best case is that I'm going to make $50,000. My worst case is I'm going to lose $10,000, but more than likely I'll clear $30,000 comfortably. If you're comfortable with each and every one of these questions and their answers, if you can live with any of these results, you know that you're able to move forward. And you always want to make sure that the properties that you're investing in have more than one exit. So if I'm going to buy it, fix it, and flip it, if I can't flip it, will I be able to rent it and turn a profit? If not, is this really the right property for me? Now, just going into exit strategies is something that I could probably spend, I spend probably 4 or 5 hours just talking about the benefits of how it is that I can take a fix and flip and turn it into a fix and hold, or reposition it, or put it into a rent to own. And these are very important things that as investors we need to be able to do. But the first thing that we need to know is that there are different strategies available, and that one strategy should not be the solution to that problem. You should be able to solve this investor's problem with multiple strategies, because sometimes things don't go the way that you plan. But if you've got a backup and that backup works, you're going to be okay. Your numbers. Your numbers are very, very important, because if you are not diligent here, you're going to struggle moving forward. If you don't know how much you're spending, or if you're overpaying, when things start to come up, as they do when you invest, you know, sometimes the roof starts to leak, sometimes a tenant leaves without giving notice. It happens. And if you've miscalculated in the beginning, it's very possible that a small deviation from your plan could actually have big impact. So what kind of numbers are we looking for? We want to know what is our cap rate in the area, and we want to know what is the cap rate for the properties that we're purchasing. This is something that applies more to multifamily property. You would never use a cap rate scenario when you're evaluating a single family home or even a duplex, just because the numbers would be skewed. But really what I want to know is, what's my cap in the area? Is it 5%, 6%, 7%? And that'll let me know if the property I'm looking at is a great deal. So if my cap rate is higher than the area's cap, this is a great deal. Or am I talking to somebody who is completely out of their mind? So the City of Toronto, multifamily property, you can find cap rates usually sitting at about 4 to 5%. That means that the net operating income versus the price that I'm paying, it's about 5%. So 5% of what I bring in is actually equivalent to what I had paid. So $100,000, my 5% cap means I'm bringing in $5,000. Now, if I find a property in Toronto that's suddenly showing up with a 7% cap rate, I know that this property is cash flowing higher than other properties in that area. So when I understand what my cap rate is in a market that I want to be investing in, I can very quickly home in on what properties I want to look at and what properties I don't. This is going to save you a lot of time. Now, if you find a property that is sitting at a 10% cap in an area that's a 5% cap, more than likely somebody's not being honest with the information that they're providing. Gross rent multiplier, this is also something that you'll find a lot, especially on the MLS. You'll see a lot of people using GRM. In this situation, so your cap rate you want to buy high. With a GRM you want to buy low. Your gross rent multiplier, what this means is how much rent, how many times rent do I need in order to purchase? So if I need 10 times the amount of rent to buy the property, maybe not the best thing if I can get a different property that only requires 7 times. Cost per unit, very straightforward. Again, something that you want to know in terms of the area. If I'm in the City of Toronto, I can anticipate spending anywhere from $120,000 to $185,000 per unit in a multifamily property. So if I'm in an area where my range is 120 to 180, and I see a building that comes up for sale and the units cost $105,000 per door, I might have a potential deal in my hands. And your ROI. This is a very, very important number for you to know, to be able to calculate and to have. This number tells you how hard your cash is working for you. So if you've got a return of your investment at 3%, that means the money that you have taken out of pocket and invested in this deal is only earning 3% interest per year. There are people who will calculate ROI and they factor in your mortgage pay down in that number. I would encourage you to first calculate your ROI without that number to ensure that your money is actually working at a rate that it should be. If you're getting 3% return on your money, there are many other things that you could be doing with that money and earning a lot more than to put it into that particular piece of real estate. These numbers that I'm giving you, these calculators that I'm giving you, this is what you're looking at before you actually start going into your due diligence. Going into numbers themselves, the details of expenses versus income versus size, this is something that requires a lot more detail. And again, it's something that can be taught later on, but it will not be something that I can go into detail here. Now, we know how to evaluate what could potentially be a deal. We know what we're looking for now. We have numbers that we want to see. We have key factors that we want to be looking for. The question is, where do I find these properties, and where am I going to build this funnel of my deal flow? As new investors, and sometimes just as investors in general, we don't know where to look, so we look to the MLS. We look to our realtors. Our realtors are very, very important. They're very important in everything that it is that we're doing, but they don't necessarily have first-hand knowledge of the best properties at the best times. Your power team, people like your lawyer, people like your accountant, they may actually know that there is a potential problem for an investor client before that investor turns to the realtor. Now, in this situation, you don't want to turn around and say to your accountant, hey, John, I'm a real estate investor. I'm looking for below market properties that I can buy. I'm willing to pay, cash. I'll close quick. So can you give me a list of your clients who might be interested in selling? When you take this kind of an approach, a good lawyer, a good accountant, a good property manager, they're going to look at you like you've got two heads, and they're going to think to themselves, there's no way that I'm going to betray my client's trust and confidence and give this crazy person this kind of information. What you want to do is say, hey, John, I'm a real estate investor, and I am looking for properties in the East York neighborhood. I want them from Woodbine Avenue out to Victoria Park, and I'm looking in the $350,000 range. If ever you have a client who might have a property that's similar to this and they're thinking about selling, do you mind maybe recommending me as somebody they should touch base with and just giving them my number? When you take it from this approach, that individual, so John the lawyer, telling his client Sally, hey Sally, this guy I know would really like to buy property that it sounds like you want to be selling. Here's his number. Give him a call if you have a chance. I know the guy. He's pretty good. He's a stand-up guy. He'll be able to close the deal. Now he's actually giving you a recommendation, and he's actually validating you as an investor. Contractors and trades. Get to know the contractors and the trades in the areas that you want to invest in. These are likely the people who are doing work for other investors in the neighborhoods that you want to be investing in. And these people are also the first people who don't get paid if an investor is getting into some sort of financial difficulty. These are also people who have invested a lot of time. They usually have done the majority of the work before they've seen the paycheck, so they really want to be getting paid. If they come to view you as the person who is able to solve investors' problems and continue to have them working and getting paid, the first time their check bounces, they may go over to Bob and say, hey Bob, my check bounced. I'm not sure if this is just some sort of an administrative issue or maybe there's some sort of a problem, but if there is a problem, I know this girl Lena, she buys all kinds of property in the area. She's totally honest. She's really great. Give her a call if ever you need some help. The Pro Desk, contractor services. These are by far my favorite people to build my relationships with and get my deals from. Believe it or not, I've probably gotten more deals brought to me by the Pro Desk at the Home Depot in Cornwall, which is one of the cities that we invest in, than I have through my preferred realtor in the area. And the reason for this is the Pro Desk is usually the person who is dealing with the contractors who are buying the materials for the buildings in the area. They are the people that the superintendents are dealing with. They're the people that anybody who is anybody in a city that really only has a Home Depot or a Rona or a Lowe's to shop from would be shopping from. Your Pro Desk is who all of the guys go to. They'll have a coffee with them while they're waiting for their orders to be processed. And the Pro Desk is actually a great resource for you to find out about the new developments that may be coming into the neighborhoods. These are the people who will be putting together the bids for buildings. So if there's a super center or a smart center or a Walmart that's going to be built in one of the smaller towns that you're looking to invest in, Home Depot is usually one of the first people to place the bid when these companies are considering construction. And at that point in time, we're looking probably 2 to 3, if not 5 years in advance of when these companies will officially let the public know that they're coming into town. So if you've built a relationship with them and you walk in one afternoon and say, hey, John, any news, any exciting things going on, they may turn around, and they do, especially if you've brought them coffee. They may come back and say, hey, guess what? Walmart's asking for a bid. I think they might be buying the lot at so-and-so corner to build a new supercenter. This is information that you as an investor want to have. Go to networking events. If you're looking for deals, you go to networking events with other real estate investors. If you are an investor who does not have the ability to get a mortgage or to put a down payment, you go to networking events that do not have real estate investors. It sounds strange, but at some point, every real estate investor is looking for a funding partner. So if we are all in the same room and we are all looking for the same people, this means that this room is not going to provide us with the types of people that we want. And it's January. Right now, you guys should be calling for rent ads. If you don't already, troll through Kijiji and take a look to see who it is that has rentals that are sitting up for weeks, if not months, and reducing their prices or offering really bizarre incentives. These are people that are showing desperation. If you call them, especially this month after all of the holiday shopping and all the credit card bills coming in, and you say to them, hey, I've noticed that you've got a property for rent. I've noticed that it's been up for a while. Would you be interested in selling? Chances are they may be open to a conversation. So now that we know how to find the right deal, it's time for us to find the right team. One of my absolute biggest things that I say in this business is your people and your systems will determine your success. If we look at McDonald's, McDonald's is a company that has 15 and 16-year-old kids running their stores and producing identical results, store by store, day after day. And the only reason that this is possible is because of the systems that they have. Now, when we're starting out as real estate investors, we don't have systems. So what we need to do is find the people who have those systems. You need to build your team. You need to build relationships and need to find the people that are going to be able to help you in the areas that you may not have the most knowledge or the most strengths. Now, there is a very specific way that you would be speaking to each of these individuals in your team. I unfortunately won't have the time to go through and teach you how to have all these conversations. This is something that I do, through an entire weekend when I teach my real estate fundamentals course. But what you need to know is who it is that you need to be having these conversations with. You need to know how it is that you're going to find the right realtor. Realtors are absolutely key to your success as an investor. There are many strategies here in Ontario that if you do not have a realtor involved with, you could potentially be viewed as trading in real estate and not having a license, which actually is an offense under the legislation that RECO, who is the Real Estate Council of Ontario, has. My biggest recommendation to you is to find a good realtor and pay them for their time, even if you find an off-market deal and that seller doesn't want to. This person, this realtor, is able to get you information that you don't have access to, information that the seller may not even know is available or may not be willing to share. And when you have a relationship with somebody who's able to access this information and who has your best interests at heart, the likelihood of your ending up with a property that may not necessarily be ideal dramatically reduces. You need to have the right mortgage broker. You need to have a mortgage broker who has the relationships with the banks that are able to fund the types of deals you want. This brings us back to that very beginning where I'm saying you need to be able to identify what it is that you want to do. You need to know what you want to invest in. You need to know why you want to be investing. And you need to know how you want to move forward so that the person who is going to be going out and finding you all these mortgages is able to do so in a way where you're not going to get stuck after your second or your third deal. You need an accountant. They're very important. A lot of us, myself included, started off wanting to do all of our own bookkeeping. We wanted to set up our own ledgers. We wanted to do whatever and save whatever costs we could. Don't skip out on the accountant and the bookkeeper. They are important, and this is very important information for all of us to have lined up correctly. Otherwise, unfortunately, we could get ourselves into a lot of trouble, not because we intended to, but because we just didn't know any better. Your lawyer, they are also very, very important. They are the ones who are going to be able to find who it is that is hiding secret clauses into your contracts to protect themselves or to take advantage. Your contractor, this is an individual who will make your life very, very easy or very, very difficult. You want to be able to find one person who has a team below them so that you've got only one individual that you need to talk to. It is very difficult to manage a project when you have to have a conversation with 14 different trades. It becomes frustrating, you do a lot of work, and it becomes discouraging because sometimes things don't get done because there are too many moving parts and you might have missed a call at exactly the wrong time. Your insurance agent, believe it or not, they are not all created equal, even if they all sit under the same banner. I had an experience probably about 4 years ago now where I was looking to move insurance for a few of our properties, and I went to State Farm. I called 3 State Farm agents here in Ottawa, and I called a State Farm agent out in Cornwall. The agent in Cornwall was able to get me insurance policies for all of my multifamily properties within 45 minutes. And an hour and a half after I had finished and signed my policies with that agent, the 3 other State Farm agents in Ottawa called me back to let me know that they were not able to insure our types of property because they did not deal with multifamily properties that were managed by property management companies and also owned by a corporation. So make sure that you guys are getting referrals for these individuals because they make things more difficult than necessary, and that takes away from the fun of this game. Real estate really is a great wealth generating vehicle, but it's fun. It's a lot of creative fun that you can have, and sometimes the fun is removed not because the deal is bad, but just because the people involved don't get it. They make things difficult, and it's just, exhausting. Your home inspector, these gentlemen and ladies are also not all created equal. Make sure that you're using somebody who is not just, checking off boxes in a form, but who actually pays attention. Again, these are people you definitely want to get recommendations from. And even though a home inspector will tell you that they can't guarantee everything, they're not going to tell, they won't be able to tell you what's behind the walls or, underneath the floors. Don't ever skip your inspection. You may sometimes find that you know more than the inspector does, but don't skip your right to have an inspection. Sometimes, especially in an area where you think you might lose a property, some people are looking for that offer where the inspection has been waived and it's just a financing condition and we're done. You don't want to deal with that seller who doesn't want you inspecting the property. That usually means they're hiding something. And your mentor. For me, my success in real estate didn't come until I found somebody who had actually done all the things that I was trying to do and not succeeding at, and took me by the hand and showed me. Now, my mentor wasn't always a one-on-one mentor. Sometimes it was a one-on-many. Sometimes it was me sitting in a classroom learning the specifics of what it is that I needed to do next. And sometimes it was somebody who was with me on site when I really didn't know how to get myself out of a jam that I didn't choose to educate myself about prior to getting into it. And even with all of this information that I was collecting, I found that if I wasn't learning from somebody who was doing what I wanted to be doing in the market that I wanted to be doing it in, sometimes I was still finding a bit of a struggle. So make sure you have somebody who's doing it. If you want to be investing in Ontario, don't learn from an American. While they have basic principles available to you, we have laws here in Ontario that are very, very specific. If you want to learn to invest in Alberta, don't learn from somebody who's never purchased in Alberta. If all they've done is purchased in Ontario and they've never even looked at a purchase of sale agreement, chances are they don't know what the legislation out in Alberta is, and vice versa. All because I'm Canadian doesn't mean I understand what it is that needs to get done in Ontario versus BC. Then you need somebody who is very, very important. This individual will actually make or break any deal that you get into. You could buy the best property or the worst property. And if this individual hasn't been vetted and screened, and if the proper systems haven't been put into place, that property will be your worst nightmare, regardless of the condition it was in when you first purchased it. That person is your property manager. Property managers are there to manage your asset. You need to learn, you need to know how it is that you're going to interview these people. You need to know what you're looking for when you want to be managing your own property. You need to know what the law requires of you, especially here in Ontario. We have the Tenant Protection Act. You don't need a property manager. You just need to make sure that you're educating yourself and providing yourself with the correct tools to be able to manage the properties that you are putting into your portfolio. It's sad to say, but sometimes property managers will do you more harm than if you were to take on that task of management yourself. So it's not that a property manager is always and the only solution. It's you need to learn how to find that right individual or how to put the proper management systems into place so that you are able to manage these properties that you're acquiring without losing money on a monthly basis. Your property manager is there to ensure that your property value goes up. They're there to ensure that your expenses are managed or decreased on a regular basis. They're there to make sure that your tenants are being taken care of, that their concerns are being met, but they're also there to ensure that the management of your cash flow is number one. So when a tenant calls and complains about a leaking faucet, if this is a $150 repair and it is not an emergency, a property manager needs to be able to manage the tenant and let them know that, yes, I hear you and I agree, this is a problem that will need to be fixed and we will do it in 2 weeks. The reason for 2 weeks is very simple. If today is the 13th of the month and 2 weeks from today we go in and we do the work, that gives you, the investor, the opportunity to collect another month's rent before having to pay for a repair. That means your cash flow is now being managed. You need to know how it is that you're going to interview these people, what questions to ask, how you're going to hire them, what kind of contracts you're going to have into place. These are very, very important things that you're going to need to learn to do, whether you use it or not. You may not need them in the beginning, but as you're building and managing, when you know what to expect from a manager, you know how you, yourself as an individual, should be managing your own portfolio. Now, the right systems. Systems in this world are key. I currently run 6 different businesses. I spend 60% of my time in Toronto, and 40% of my time in Ottawa. Now, this time, unfortunately, is not broken into even 2.5-week clumps. It's 3 days in Toronto, 2 days in Ottawa, 5 days in Toronto. Sometimes I'm flying out to BC. I'm all over the place. If I don't have systems, if I don't have solutions where everything that I need can be managed from a simple remote location, I would be running around with absolutely no clue what's going on a day-to-day basis. And if I don't have systems, I would only be able to do probably 30% of the work that I'm doing today, and I'd make probably 70% less money. So as an investor, the type of systems that we want to be looking for are going to be systems that encompass the entire process of investing. So we want to know, how are we finding our deals? We're building a funnel. So are we going to realtors? Are we having them go out and build the relationships? Are we looking for wholesalers? Are we looking for people who are going to go out and build relationships with individuals who will bring them deals that they will then send to us? And how are we going to be managing those people? When we get these deals in, how is it that we're going to be evaluating them? Do you have software that will do that? Do you have a partner who will do that? Are you going to be doing that? For me, I have a spreadsheet. It's very, very simple. Anybody that I work with has this spreadsheet. They plug in the numbers and they know if the spreadsheet turns green, then you bring it to Lena. If it doesn't turn green, figure out why, and if you can't find a solution, move on. You need to know how it is that you're managing your properties. Are you going to manage them? Are you going to manage them remotely? Do you want to live inside one of the units until you get a handle of what's going on in the property, or do you want to hand it off to somebody else? And you need to know how you're going to fund them. You need to know if you're going to be using other people's money, your joint ventures, because again, like I said, you can create no money down deals, but the money needs to come from somewhere. It may not be money out of your pocket, which is why it's no money down, but money needs to be exchanged. So if you don't have the money, we need to build the relationships with potential joint venture partners so that we can. We need to find private lenders. So if we're going into a business of buying, fixing, and holding as an example. So I'm going to buy a property that is distressed and it has a potential of substantial appreciation for a minimal amount of cosmetic work. This is something that if I don't have the ability to get a mortgage from a bank and I currently don't have a joint venture partner, I may look at a private lender temporarily. I may look at finding somebody who's able to privately fund my deal, and once my property has been completely redone and it's reached its maximum potential, I can then refinance, bring in a joint venture partner, I can bring in an RRSP second. There's a multitude of ways to be able to pay off that higher interest loan and bring it in with either private money or traditional financing with little to no money out of your own pocket. So we really need to start building the relationships. The relationships are key in this area, and we need to build those relationships from day one so that when the deal that we need comes, we're able to go out there and start funding. Now, real estate fundamentals. I told you that I wasn't going to be able to teach everything to you all at once, and I told you that I do teach these things over the course of 2 days. I will be teaching it 2 days, January 24th and 25th in Toronto. We currently have 24 people confirmed and registered. My classes are only ever 30 people large. I keep them small because I don't want a situation where I have 100 people in the room and I'm not able to actually answer questions. My workshops are very, very specific. They're very, very interactive, and they're not the traditional, let's spend 4 days learning how to calculate a cap rate. We're going right down into how am I building a relationship? How am I having a conversation with my realtor, with my joint venture partner? What's important for me to have in my agreements with these joint venture partners to ensure that my assets are protected, but their money is also protected and they're comfortable bringing their money to the table? For me to be able to do that, and for me to be able to ensure that everybody has all of that information, 30 people tops, that's all that we do. We usually charge $19.97 per person plus HST for this event. And obviously, Raymond Aaron and his team has asked me to provide a nice discount for his clients, and we have. We're offering this to you all today, $697. That'll give you 2 full days. We're going to go through all of the fundamentals of real estate. We're going to go through how to select your market. We're going to go through every single one of those exit strategies, what they mean, what to look for, the advantages, the disadvantages. We are going to be talking about how to hire the realtors, how to actually speak to joint venture partners, investors, and how to fund those deals. What you need for the bank, what you need if you cannot qualify with the bank, and how it is that we're going to be able to bring other people's money to the table so that we've got no money coming out of yours. To register, you need to follow the link below, aaron.com/real estate course, but obviously $697, that discount is not enough for Raymond, so we're throwing in some bonuses. In addition to a heavily discounted rate, I'm throwing in a 1-year subscription to Canadian Real Estate Wealth magazine free. You're going to get my deal analyzer, that spreadsheet that I told you that people are going to get. It needs to turn green before they send it to Lena. You guys are going to get that free. And you're going to get that the minute that you guys register. Once your confirmation email has come in, you're going to get an email from us so that you can start analyzing your deals today. You're going to get access to not only my local teams, so my accountants, my lawyers, my contractors, you're going to get access to the network of investors as well as the deals that we currently have going through our system. So if you've got property that meets the needs of one of my funding investors, we will make that introduction for you. You guys will be able to be a part of this inner circle where the funding that you may need to go and move forward on the purchase of this deal that you found is being brought to you. It's somebody who I have spent several years, months, whatever it might be, building a relationship with, and they will have that confidence to move forward knowing that you're using the same type of systems that they're used to seeing through our company. In addition, we're going to allow you to bring a guest for free. You need to choose your guest carefully because this is the person who's going to spend the entire weekend with you. Make sure this is someone who's positive, someone who you want to learn and share this experience with. It could be your spouse, it could be your business partner, it could be your best friend. But please don't bring somebody who's going to be negative. We're very high energy, we love to have fun, and we don't want anybody who's going to, rain on our parade. And I'm giving you a 100% money back guarantee. So if you are not satisfied by the end of day 1, if you don't think that I'm delivering what it is that I've promised to deliver, if you don't think that what I'm giving you is giving you value or something that you can do something with, walk to the back of the room, hand in your training manuals, and we will give you a refund, no questions asked. This bonus is valued at $2,500, and we're giving it to you for free. Not discounted, for free. But like I said, we've only got 6 spots left. You need to get on. You need to go to aaron.com/real estate course, and you need to get yourself registered now. If you are thinking about bringing a guest, I don't need your guest's name until probably Friday. Now, Ashar, if we can just open it up to any questions that we may have.
Yeah. We have a question from Rick. His question is, what is a cap rate?
So, Rick, a cap rate is the capitalization rate. So this is the relationship between your net operating income. So the income that you have after you have paid all the expenses from your property, not your mortgage, and it's the percentage in relation to the purchase price. So for us in our company, what we look for in the areas that we're in is to have an 8 to 10% cap rate. That means that if I am buying a property that has a price point of $100,000, I need to have net in my pocket $8,000 to $10,000 of income. Does that answer your question?
Okay, perfect. And this is everyone's opportunity right now. If you have any questions whatsoever, now's the time to ask.
And it can be anything.
So what was your biggest challenge when you first got started?
Oh my goodness. The biggest challenge that I experienced was the complete lack of Canadian knowledge that I had. I was trying, or it's not that it was Canadian knowledge, but I was trying to do things that were very aggressive because they were taught to me by Americans, and I didn't understand that Canadians did not work that way. The pace that we function as Canadians were naturally much more conservative, and I didn't understand that because I was taught in a certain way. So I found myself getting a lot of very irritated and angry people that I was dealing with. I had many realtors who didn't want to deal with me because I was told, you know, go out there and submit 100 different offers. Who cares if nobody takes them? Something will stick. So I was labeled as somebody who was wasting other people's time because I didn't understand how we as Canadians functioned in this type of a business. It took a while to figure it out, but once we did, it was golden.
Awesome. And what's been your biggest? Oh, actually, we have a question from Henry. Is it is it possible to get a recording of this presentation? Yes, Henry. All the people who attended will get a video recording of the presentation. So what's a common question that people usually ask you about the training or about real estate? People that are interested.
So one of the big things that a lot of people will ask me is, how does our training differ from that of others who are coming out? Because there's a lot of product available. And the one big thing that I would want people to really understand is this is a very no-nonsense, to the point, black and white workshop. So what many companies extend over 3 days. So they'll sell you into, you know, a property management workshop, a creative financing workshop, a, you know, real estate basics workshop. We take the guts from 11 years of experience and we go through them and to the point. We spend the majority of our time in these workshops dealing with the stuff that really matters, which are the relationships, the systems, creating the conversations and the contracts that you need to protect yourself, learning how to get other people's money, because honestly, if I overpay for a property, I'll recover. But if I don't have the money to buy that property that's going to get me out of the rat race, I'm going to be working for 5, 6, 7 months, years, who knows? So let's discuss what's important. And that's where we differ. We do a lot of role playing. We really want you guys to walk out of there knowing that I have a proper blueprint on how it is that I'm going to go to a networking event and how it is that I'm going to present myself to potential investor partners. I'm going to know how it is that I'm going to present my opportunities to these partners and how it is that I'm going to identify the problems that they have so that I can speak a language that they need to hear to know that my solution is the right solution for them.
Awesome. We have a question from Rob H. The question is, would Detroit slash Winnipeg area be a good area to invest in right now?
Detroit slash Winnipeg. Detroit, I am not comfortable investing in. I also haven't done enough research to be able to tell you whether that would be a good deal or a good place to go. What I know is that Detroit right now is obviously not in the best economic state. There's, a lot of vacancies. They filed for bankruptcy. I mean, the city at some point is going to need to rebuild, and they're going to need to find money somewhere to be able to rebuild. Usually that comes through taxes. Winnipeg, I can't even comment on. I've never been to Winnipeg. I know quite a few investors who are in Winnipeg, and they are very, very successful. But it's not something that I would be able to do or to comment on. What I would tell you is if you are going into any of these areas, number one, you need to find a team. Whether it's a good area to be in or not makes no difference if you don't have the right people to manage that asset. You could buy in the best areas of Canada, put the wrong people in place, and that investment will turn into a nightmare. Does that answer your question?
Yep, he said thank you.
You're welcome.
I think that's the final question right now. So we'll have a last call for questions. And any final words, Lena?
Real estate, if I have to say one thing, not only is it a beautiful game to be in, but you should all know that in this game, you can do whatever you want as long as everything you're doing is 100% legal, it's 100% ethical, and all the parties involved are aware of what's going on and they agree. When you have the ability to be that creative, it's a wonderful game to be in. And it doesn't take a lot of real estate to make a massive impact in your life. One or two properties purchased properly could make a huge impact, not just on your life, but the life of your friends, your family, and whoever else that you want to reap those rewards with. So don't be afraid. Don't be intimidated. It's a beautiful game. It's not a scam. It works, and you can have a lot of fun doing it.
Awesome. Well, thank you, Lena. Thank you for sharing your wisdom and experience with our clients. Uh, from behalf of Raymond and our team and our clients, we'd love to thank you for your time, and the hour we spent together was very insightful. Thank you.
Thank you so much for having me, and I do hope that everybody online enjoyed the presentation. And if you do have questions, again, please feel free, reach out.
Good night, everybody.
Good night.